Disclaimers. 1. The content shared in this podcast is strictly for informational purposes and should not be construed as financial or legal advice. 2. The opinions expressed by the hosts and guests are solely their own and do not represent the views of their employers or affiliated organizations. 3. None of the projects or companies discussed should be considered as endorsements or recommendations. 4. While efforts are made to ensure accuracy, the information provided may not always be up to date or entirely reliable. It is advisable to conduct independent research and seek professional guidance before making any financial or legal decisions. 5. The hosts and guests of this podcast shall not be held liable for any consequences or actions resulting from the use of the information provided. 6. All content, including text, graphics, and audio, is protected by copyright laws. Unauthorized reproduction or distribution is strictly prohibited. 7. Any discussions on sensitive topics aim to foster inclusivity and respectful dialogue, but differing opinions should be expected and not attributed to the podcast creators or sponsors. 8. By listening to this podcast, you acknowledge and agree to these disclaimers, and you are responsible for your own interpretation and application of the information presented.
Hey everyone, welcome to the Intersection4 Podcast. This is our first episode. We're very excited to kick this off. The purpose we're putting together this podcast is, we would have these conversations between the four of us as friends all the time, and we thought there were some very interesting insights there that we would love to share with everyone else as well. So what you have on the podcast is a great set of different perspectives and backgrounds coming together to talk about whatever's on top of our minds and most important to us, around us and to us in the world. You have an investor, which is me. You have an engineer, which is Sam. You have a founder, which is Brendan, and you have a lawyer, which is Rich. So we'd love to kick this off with a few interesting topics for the week. But in terms of background, I'm the founder of an investment firm called Purus 21 Capital. Sam is an engineer at Google focused on Web3 technologies, and he's also part of ATX DAO. We have Brendan, who's the founder of Athena Intelligence, and we have Rich, who's the head of strategy at Google for Web3 initiatives.
Okay, so the format that we're shooting for the pod is we have four people, four different backgrounds. As James was saying, I bring more of an engineer in crypto, kind of like degenerate background and very in grassroots. James brings more of the financial investor background. Brandon is running a really cool startup, and Rich brings more of the strategic and lawyer background. So the format that we're going to be shooting for moving forward is each of us brings one topic of discussion for every single episode that we're going to have moving forward. Each of us does the introduction for the topic that they want to discuss. And then we have like a 5 to 10 minute discussion around that specific topic. The four topics that we have for today, and I will not say who brought them. It's up to you to guess if you want. And then as the pod goes on, you can actually figure out who actually brought each topic. But we have four topics. We're going to talk about whether AI and AI startups are overvalued and overhyped. We're going to talk about a recent claim by the IRS on the FTX bankruptcy procedures. We're going to talk about quantum computing, and we're going to talk about growing financial concerns with the American debt ceiling and global financial crisis. Those are our four topics, so I will pass it on to James now to introduce the first topic that we have.
So let's kick this off with the first topic of today, which actually I'm going to lead. And the first topic is how we all felt that it was quite interesting to see what we believe is a bubble in the AI space. We feel that just like most technologies, when the first version of it comes out and starts to make its way to the hands of regular customers, a lot of times what you can find is that there's a big gap between what is expected and what people hope that technology could be and what probably the reality is going to be. And so if you're spending any time on the internet, you will know over the last 6 months, or really over the last 12 months, people cannot stop talking about OpenAI, ChatGPT, large language models, and everything in between. And so initial thought as an investor is always, whether the excitement and the interest in the space is something that can be rationalized or something that might have gone into the realm of irrational. My belief today is that it has gone into the realm of irrational already and very quickly. You're seeing some of the deals that are being done in this space. You're seeing some of the price action for a company for any company that has AI in its name, and you can start to really piece those things together. So I wanted to, present this question to the group and see what their thoughts were. And so, really anybody can pick this up and go. But the first basic question is, are we in a bubble, or am I underestimating what this technology can do?
Okay, so my first thoughts, obviously not biased running an AI startup, is actually that those both can be true at the same time. And
Okay.
thinking about the space right now, I think an AI startup can be overvalued, and there could be a number of them that are currently overvalued, while the space writ large is still undervalued. A few reasons for that is, given the dry powder or investment decisions that are coming across the table in a number of different spaces today, I wonder if there's a better opportunity. And what I mean by that is, we're going through somewhat of a recession. There's not a ton of fantastic companies that are coming across investors' decks, and this is a opportunity, even though it might not be the opportunity or correctly valued. The one that comes to mind for me is vector databases. I've seen an explosion of companies just discussing vector databases. One which I think is going to be commoditized and eaten up by some of the bigger infrastructure companies. But I still think writ large the space can be and is undervalued.
Do you feel, Brendan, that the commoditization will happen at the infrastructure layer? Or do you think it will happen at the startup or application layer? Like, where do you feel that the most commoditization happens?
Definitely the infrastructure layer. I think we've seen, like, if startups win, it is typically because they solve a customer pain point extremely quickly, and that pain point is felt most acutely, I think, at the application layer, because that's where customers are typically interacting and where decision makers are typically touching that end product. The infrastructure is typically harder in many cases, and if we think about the way that businesses have currently bought software and infrastructure style investments, they have early in the year negotiated an Azure rate or a GCP rate or an AWS rate. And for a startup to compete against a broad rate that all AWS products are given to a company, that would be has to be subsidized either by VC funding or some other mechanism to compete at that layer.
Yeah, and that makes sense. It makes sense that the commoditization happens at the model layer. One of my biggest concerns with all of this is, as I speak to companies that you're right, are very interesting in an environment where very few things are interesting, because the unit economics for most of the companies we see just don't make sense. And one of the ways that you can make the unit economics make sense is you increase productivity so much using frontier technologies that now the unit economics do start to make sense, right? But one of the challenges I have there is, the way to monetize many of these models or to monetize at the application layer, to me are really weak, because we'll speak to companies with 200,000, 300,000 active users, but less than $1,000 of monthly recurring revenue, right? So to me, it's a lot of interest in the space for sure, a lot of free users for sure, but they're not able to actually convert that into anything meaningful. And so I think because we're up against a lot of open source competitors, it's going to be very difficult to monetize this. I think especially at the infrastructure level, but maybe if you create a very specialized infrastructure layer for a very special use case, maybe there's some monetization there. Maybe if you create a very special application and it's super specialized, maybe there's monetization there. But that's one of my biggest challenges, is that this war is not between OpenAI and Elon Musk's next AI company. Like, this war is between OpenAI and all the open source models out there. And so the question I'll pose to our crypto bro here is whether we think that the way that Bitcoin, Ethereum, and some of the some the crypto networks have been able to monetize open source software, right? Bitcoin is open source software, but they're able to monetize it and create an economic structure around it. Do you think, Sam, that the companies in the AI space can borrow some of those learnings, and can they also monetize open source software in a similar way?
There's like several thoughts that I have here, so I'm gonna go in a bit of a spiel here. So first, I want to contextualize the discussion about AI companies being overvalued. I think there is public equity and then there's private equity here. And so far, we've been talking about private equity because it's kind of like the exposure that both of you have. So James being a private investor and then, running a fund, investing in private equity, and then Brendan being a sort of founder of a private company. But I think I want to highlight that, like in the public markets, since the opportunities to invest in AI startups are so limited, anything that is minimally related to AI has been getting a huge boost lately. I want to highlight there's an AI ticker. There's a ticker in the New York Stock Exchange that is literally AI, which stands for C3.ai. It's a company that does is a company specializing on artificial intelligence. I'm actually not super familiar with what they do, but I want to highlight that
nobody is.
Yeah, but year to date they're up 80%, and then late March or early April, which was the peak, they were up like over 100% in their stock price. And that's just basically because everybody's trying to find a way to get exposure to AI. But specifically on private markets and just generally startups, I think we're seeing two really interesting things take place. And one I want to, they're the same thing. They're transpiring through two different entities. And I want to draw this distinction here between what you were saying, Brendan, about commoditization at the infrastructure layer and then application-specific solutions. So I think there's a lot of interesting companies coming up, building solutions on top of the infrastructure that currently exists, and that infrastructure being Microsoft's OpenAI and the APIs, or Google's AI plans, or any other big company that has infrastructure and has the models, and is starting to offer APIs, and then companies that are specialized in a specific subject, they grab that infrastructure and turn it to solve a solution, and then they go to market with that, they move fast, and they solve a problem, and the traditional sort of story. But I think this is really cool to see the trend. That is, the power, if you may, lies in the platform, in my opinion. Like the really, really, really big opportunity lies in actually being able to have the platform, having the models that people are interacting with, or having the data for that matter. And most people, since they don't have the resources necessary to be able to train the models and operate the models at scale, it seems like most people are being relegated to just come up with APIs, with wrappers, with plugins, with apps on top of that infrastructure to be able to somehow monetize some of that and distribute the value that is being generated through AI. But bigger than this, I think there's a bigger concern here as we continue to move forward in this AI race, that the power that is being concentrated by some of the platform players is just like slightly concerning. Because it's really hard for, even though the models themselves, or a lot of the code for the models, is open source, the energy requirements, and I went in a really deep rabbit hole on this before the pod, the energy requirements, the compute requirements to be able to operate these models is huge. Like, I saw an article before the pod that said that the daily operational cost of operating ChatGPT or GPT-3/4 was around $700,000 a day. Like, who can cover those costs, right? So I think we're seeing a very strong distinction here between platform players and then apps or plugins or API integrators.
Yeah, that's right.
Slightly on that, I think the costs are coming down at an exponential rate to train large language models. We're noticing that you don't need as big over-parameterized models as we originally thought. Emergent properties might not be there. There might be linear properties. There's like research that's coming out week in, week out that I would guess in 6 months' time, once Stability AI puts out their version of, top 10 language models, the smaller models are going to start coming, and the smaller models are going to start winning as well. So I'm not as worried about like model training not being able to be done by startups and smaller companies. And mind you, like Microsoft also is incentivized to make it look more difficult than it is, because OpenAI is paying Microsoft the infrastructure cost in their their actual deal. So there was
Yeah.
some posturing, I think.
Yeah. And
But you
and
know
I
what's
think that's
also
the exact I think that's the exact point. Like that's what I'm worried about. I think that these really super specialized models that don't cost that much, continue to improve over time, they're going to chip away at this, dominance that some of these larger players have. And the larger players are going to front the cost of building this entire industry, but they will not be able to monetize it. Like that's what my fear is as an investor, right? That in OpenAI, they'll dump the billions and billions of dollars, right? Like according to the CEO of OpenAI, they think it's going to be the most capital intensive business Silicon Valley has ever seen. Like they expect to spend $100 billion by some accounts to get this
it's
company off the ground, right? Like, and so that's fine and that's great for society, but that's not great for the OpenAI investors, right? Because they're going to front that cost and then they're going to get outcompeted by somebody who's training that super specialized model that everybody actually uses as an open source solution.
But how easy though? How easy is to actually train some of these models on your own? And maybe this is more of a question for Brendan, because
It is, yeah.
my understanding in training is like it's not only about like the compute resources, also access to GPUs. And I think if you want to do this at scale and not just build an application specific model, but rather build a generalized model that is able to serve applications on top of it. And that's my argument is who will be able to compete in the platform business moving forward. And one thing that I want to highlight from crypto is there are some companies out there that are doing interesting concepts about bringing access to GPUs in a decentralized way. So in a nutshell, they're just like building marketplaces of GPUs or compute resources for anybody who has an open source model, who doesn't have access to a million GPUs, or however, I don't know how many GPUs it took to train some of the GPT models, but if you want to have access to GPUs, you can go to some of these marketplaces and do it in a decentralized and open way. I think those are good things, but I wonder, like, what are the thresholds of access to compute power to be able to build a model that is not just unique to solve your use case, but can actually be turned into a platform and compete in the platform business?
I'd be interested to know a startup that has the scale of data necessary to train a model from scratch and not.
So you think that the issue is data?
Well, I think there's just not many companies that have a data set that requires either fine tuning or base model development, right? Like there's just not a huge reason. You can take the open source Facebook model, which startups can do this, but enterprises can't because of the licensing right now. So there's just a lot of, actually, this is a good question for Rich to chime in. Maybe what I'm noticing is there was a letter that was leaked from Google about OpenAI, which said basically, hey, we don't have a competitive advantage, especially when models get leaked to the public, like Facebook's did. Startups use those models to train net new pieces of work, and then they're not going to be litigated typically because they're just too small, and who's going to go after them? But a Google or an OpenAI can't do this, take this approach. So these startups are kind of getting like small headway, and then they're figuring out their legal requirements, solving that at a later point. I think this is like a fact that, again, smaller models, less training required. We're focusing on fine tuning. At least that's the direction the industry is going.
Yeah, I mean, just a couple thoughts on that.
Yeah. So, Rich, what do you think about? So,
Go ahead, Hamis. Yeah.
Yeah, I'd love your thoughts on two things. One, that licensing. I'd love your thoughts on the licensing. I'd also love your thoughts on the regulation of the space, right? Where are we? One of the biggest risks I see as an investor is, a bunch of rule makers get together and say, oh, actually, this is going to hurt jobs, so we're just going to shut this down, right? So talk to us about what you think.
Yeah, so on the first thing, like, it's kind of funny, like, what's old is new again. If anyone was like following a lot of the facial recognition startups that existed a couple of years, they were like really hot, especially pre-COVID. And the fundamental problem was exactly the same. It was, in order to train what we call like a machine vision algorithm to be able to recognize a face, basically you do something like pairwise comparison, where I say, this is a picture of Sam. Now find me Sam again in a million images. What you have to do is you have to train that artificial, really it's an AI ML model. You have to train that on a bajillion different faces. And so what ended up happening was people started asking questions like, well, where did these faces come from? And it led to a bunch of multi-billion-dollar lawsuits. And the reason was like nobody had really thought about the fact that I don't know, using people's faces in training data that gets put into a black box of a machine vision, neural network that says these are new faces, like that's actually going to cause a problem. And so like I think that's on the licensing side, the letters about like, the being an incumbent and why it's challenging, like are absolutely right. And you saw that with facial recognition technology, or what we call face matching, right? Facebook settled, I think it was like $1 billion lawsuit in Washington state over this. And it had nothing to do with like the ethics of the model. It had nothing to do with like them using the model to like, I don't know, help law enforcement or anything like that. It had to do with someone's face ended up in the model, and then the model was used without their permission. And so I think like that question in the LLM context is times a gajillion, because it's not just an image, right, for generative purposes, but it could be like, copyrighted materials, any sort of, information or IP that you have around your business, could be patents, could be anything. So I think that's like, we're going to see that to a magnitude of 100. And the funny thing is like, we have this concept called synthetic data.
Do you think though?
Yeah.
I was going to say, do you think they know this and they're just okay because traditionally the litigation costs and the fines are worth the squeeze for now, or is that like, are they actually real? I
mean, I think that they're the cost of doing business. Like, I think this ties into Hama's second question, which is like the regulatory stuff, which is like a civil litigant suing you. If you're operating in a heavily regulated space, or a space where there's a lot of plaintiffs, like you build that in, right? If you're the CEO of a large broker dealer, you sell equities, you just know someone's going to sue you for securities fraud. It's just going to happen. Somebody's going to say, oh, well, you sold me this IPO and the IPO didn't do as well. And it didn't do as well because you didn't have the right disclosures. And you kind of just say, like, this is the cost of doing business. If we want to do this at the orders of magnitude, billions of dollars a year, every year we're going to spend $20 million dealing with someone suing us for securities fraud.
We lost Rich. We lost him, man. Yeah, in the middle of it, man.
Yeah, and I was just in the middle of the spiel around the cost of doing business. Yeah. Okay.
Go ahead.
So, okay. So like when you're doing any of these, when you're building a business like this, you're building the litigation costs and the cost of doing business. The trick though is that what you're not building into your business is that there isn't some sort of like ex machina moment where Congress just says like, we're putting a full stop to this, or, like what happens in sports gambling, right? Which is there's like a cottage industry run by states. And then all of a sudden they said, hey, look, sports gambling is illegal. And it went state by state by state by state. And eventually, like, there is no cost of doing business that you can build into that. It's just that you're running a criminal enterprise in the eyes of the regulators. And so you have to stop it until you can lobby for a change. So like, I think that's like the thing that I'm interested to see here is, one, what does the, we'll call it like the litigation around model training look like for LLMs? And like, how aggressive is it? How high stakes is it? And who are the targets? I think Getty's already sued some of these people for use of their images around the generative AI stuff, I think in Stable Diffusion and Midjourney. And then the next is like, what do the regulators choose to do in terms of regulating this? And like, I think there's like a really interesting Section 230 argument that you could start to go down here, which is, arguably, these things like ChatGPT and Bard, they're platforms to Sam's point. And if they're a platform, you really have a hard time, managing the content that gets published there without violating 230. And so maybe there's an angle there for these guys to prevent that kind of like sui generis regulation that would shut it down.
In a more kind of like philosophical thought too is, I remember seeing a post, I think I heard about this in the All In Pod, of an animator that was just super disheartened with Midjourney and said, I used to love my job. And now after Midjourney, like I feel completely useless. All I do right now is like creating prompts inside of Midjourney. And I've pretty much lost all the passion for my job. But I think he closes with a statement saying, I think it is very tragic to think that all the art that I've done throughout all the years went in to feed this model that is now displacing me from what I used to love to do. So kind of like in a deeper metaphysical sense, or philosophical sense, should I say? It's a little it's a little tragic, honestly.
Yeah, like
but
we were like playing around with Auto GPT yesterday. And I've never been like so scared that something was going to take over my computer and just kind of like run my life, because I had like no idea what it could do. I was like, it was asking me before doing things, but I wasn't sure if it needs to ask me, right? Like it has access to my computer and the internet. And it really started thinking like, I think the only like majors that will be left in college are all going to be like liberal arts majors,
yeah,
and it's going to be all like people who can explain things to a kid, and whoever gets like becomes the best at explaining things to a kid will be able to explain it the best to these models, and there will be no like hard skills anymore. Like it'll be, and I think all of our jobs, like not just like some of us, I think all of our jobs. I was thinking yesterday, I was like, hey, the stuff that I do, like, is it necessary? Like, should I just be also a prompt engineer? Like, I don't know. Like, the Auto GPT, especially yesterday, because Chat GPT, I used to be able to tell myself, oh, it doesn't know what's going on in the world. Like, it's not gonna be able to replace me. But after playing with Auto GPT yesterday, I was like, man, this stuff is serious.
I think there's a deeper philosophical discussion here, that I think we should actually explore maybe on a future episode, and probably bring a philosopher as a guest as well. But what I want to say is there's two things. So one is a comment, and the other one is a question for the group. I think the comment here is that regardless of what happens with the future of the technology in terms of whether we reach AGI and whether this leads to like the destruction of society in a very kind of like pessimistic and exaggerated way, regardless of it, we're definitely going to see a huge shift in demand for skills, a huge shift in terms of displacement of jobs. New jobs are going to be created, but I think this is going to force us to reckon with the meaning of purpose for most of our lives. A lot of people who found purpose or who find purpose in their work, especially in Western societies, feeling that the purpose is suddenly ripped away by something that can do the job that you used to do infinitely cheaper, infinitely faster, infinitely better. That is really, really hard. And I feel like all of us need to like start to come to terms with it, and think how that's going to impact kind of the feeling of purpose that we get from work. And then the second point that I think I want to pose it as a question, a closing question on this topic for the group is, I think we can all agree that we don't know exactly what we are, I should say, I think we don't know exactly what we're getting ourselves into when it comes to Gen AI and where this may lead us. And one concern that I've heard several people make, I was listening to a pod with Lex and Max Techmark, Max being the founder of Future of Life Institute. He was one of the leaders of the open letter that came out a couple months ago to pause large language model training for 6 months to allow society to catch up. But one of the things that he was mentioning in that podcast was that maybe this is a technology that we don't want to open source. Maybe this is a technology that we don't want to make really easy for people to have access to, because the more people have access to really, not necessarily have access to, but have access to actually creating some of these models, because the more people have access to creating these very powerful models, granted, yeah, the value is democratized, the access is democratized, but at the same time, the risks are also democratized. So that's kind of like a question that I want to pose to the group here is like, should we be pushing to open source and give more access to this technology and to the tools to create some of these models, or not?
Mm-hmm.
It's like the UN treaty on.
Go on.
I think all of us have something to say on this, right? So
Yeah.
I think like you can't pick and choose. Like they have said that about every technology that's ever existed. Like they've said, don't open source this; it will change the world.
No, but I think this is objectively different. Like it's pretty much like, should you open source access to nukes? Because I see.
That's yeah. It's nuclear proliferation, right? That's the same thing. It's the same. That's if you're going to take that heuristic, you have to actually take the mental model of this ought to be treated like, sort of the UN's treaties on nuclear proliferation and prohibition on nuclear proliferation. Like the unfortunate thing about human society, Sam, is like we probably won't see that until you see AGI powering like swaths of drones attacking civilian cities. Like that's actually what that will lead people to. I mean, it's the same thing. Look, you blow up, you have Trinity in the desert in the Alamo with Oppenheimer and all those guys. And that should have been enough to say, hey, we shouldn't do this. And they weaponized it immediately, dropped it on 2 cities. And then everyone was like, oh, maybe we shouldn't do this anymore. So, I mean, it's unfortunate, but I think that might be, Sam, like the way that we have to think about it if it goes that way.
And you can draw a pretty close line to the printing press and the Catholic Church, right? And you basically said, what does it look like to open source access to reading and writing? They would make the same arguments.
But who? I think the question is who gets to decide, and what makes them decide that, right? So, can we decide for the first time in the history of technology to do something like this together before things get so bad that we're forced to make the decision? Right?
I've made the argument before, and maybe I think I've spoken to some of you personally, that I think this is very much this is very similar, or I see it very similarly to the Cold War, but I see it critically different in some very specific and dangerous points. So the 2 main points that I see being critically different and making the situation a lot worse is that during the Cold War, the impacts of a negative outcome were very clear and were devastating. So everybody knew that if any nuke went off, the world was blowing up. So everybody was very clear on that. Here, we don't know what's the danger of one of these really powerful models leaking or some sort of agency being developed. That's very unclear. And then the second thing that I think is different from this and the Cold War was here back in the Cold War, the incentives of the key decision makers were not directly tied to the outcome. Granted, everybody didn't want the world to blow up, but you didn't have any sort of personal incentive in a specific outcome in the Cold War. Here, the key decision makers, the people who are saying yes to this test, yes, deploy this, yes, launch this product ahead of time, have a direct economic incentive tied to the outcome of that specific race. So I think those 2 little differences there, the outcomes being a little bit more murky, and then the incentives being directly tied to personal gain, make this a lot more dangerous. And I am personally kind of concerned, but it's also kind of a fascinating thing to be witnessing from the technological side. But
yeah, interesting.
Should we move on, or?
Yeah, let's move on. Let's move on
Okay.
to the next one. The next one is going to be the state of quantum computing. And our resident founder and machine learning, quantum computing, and AI expert is going to lead this. Go ahead, Brendan.
Quantum expert, but I thought it would be fun to do a recap of where quantum's at today. I think there's a ton of hot, fun topics in the media, but things that are making progress, in the underbelly. We want to touch on some of those and kind of do a quick review of where it's at. So as a quick refresher for some of us who maybe aren't as familiar with quantum computing, quantum, and kind of what this looks like, I would make an analogous position to energy production. There are energy production through solar, through nuclear, through gas, oil, a hamster wheel. All of this is energy production. Similarly, there is multiple approaches to doing computable work. Quantum is a platform approach to doing such work. There's multiple approaches to quantum: superconducting, annealing, topological, trapped ion. Various startups and companies are taking different approaches here. All this to say is it's not a one-to-one mapping to classical computing. However, there is strong promise that this will be revolutionary for a certain set of problems, primarily optimization problems, which are very apparent in machine learning. And because of this, we wanted to, just touch on the topic, review where everyone's at from the key players and kind of what's coming down the pipeline. So from a key players perspective, we have Google at 53 qubits, I believe. IBM just went from 127 to 433. There's D-Wave, Microsoft, Rigetti, IonQ are some of the major ones. The US is still known as the leader China is fast approaching, I believe, on this topic. Qubits are composed of not only their computational power, but also how high of quality they are. So we can't take a one-to-one mapping. And then in recent news, 2019, Google announced quantum supremacy. So just kind of a landmark in which a quantum computer was able to do a task that would have taken our best supercomputers roughly 100,000 years to complete. So this doesn't mean that they're fully available today and useful, but one such task, they were able to produce results which were quite promising.
When I was
yeah,
just a quick question on the state specifically with IBM. When I was doing some digging on the state of quantum computing, I was actually surprised with the qubit processing power of like on the lower scale. I thought we were a little further ahead. I think like I saw IBM having like a 127. You said qubit processor available, not available like publicly available, but someone's there research and so on. But I remember seeing when I was doing the prep that they had promised or they had claimed that by 2023, so this year, they will have a 1,000 qubit quantum computer. Any status on that or anything that you've heard, like any major breakthroughs on a huge number of qubits becoming available anytime soon?
Yeah. So I think the industry in the last few years has switched from raw numbers into qubits of higher quality. So you can keep jamming more qubits into these superconducting arrays and lattices, but you lose computability on top of them. So I think there was a race to quantum supremacy, which IBM and Google, we would argue won, and IBM is close following. The next one is actual like applicability in industry. So I think we care less nowadays about the number of qubits and more about real world use cases, which there are still few and in between, but are starting to crop up. I think one like area that I wanted to pose is this feels a lot like crypto in that we have a technology and we're trying to find a use case, and there's going to be a lot of swinging and a lot of misses, but it just takes one to really hit. Do you guys have the same feel, or how do you think about this market compared to other frontier markets?
Yeah.
Maybe James to
Hey,
start.
that's not fair. We already have a use case, right? we have multiple use cases. We have currencies, we have meme coins, right? We have NFTs. Like we have use cases, man. Like don't be like that. But yeah, I agree with you. I think that at scale, crypto has at least on the store of value shown that it can attract between 500,000 and 1 million users on a daily basis on the Bitcoin network. It can have more than 100 million accounts on that network live, and that system has been running successfully for about 13 years. The reason that I got exposed to quantum was through the crypto channel because it was one of the arguments that we would hear all the time, but how these systems could be broken using this type of computing capacity. So that's really all my interaction with quantum computing. But that's what I would say on the crypto side. I would say that there are actual live use cases that might not make a lot of sense to us today, given our socioeconomic background, our environment, but do make a lot of sense in a lot of the countries that we spend time in and speak to people in, where this type of crazy inflation or this mistrust in local governments has really made this a real use case. And through thick or thin, through up cycles and down cycles, at least that store of value use case has actually had pretty consistent daily active users. Yeah.
To your question, Brendan, I think what's the use case of this technology? I think in the early days of quantum, and by early days, I mean, I don't know, like I remember hearing this even before I went to college, like 2015 or so. People claiming or dreaming about one day quantum processors being commonplace in every single computer and every single laptop out there. So the same way that your computer has X number of CPUs and then X over 8 number of GPUs, you have like X over, 32 number of quantum processors. I don't think that's going to happen. Mainly, or I wouldn't say necessarily I don't think that's going to happen. I think like that's kind of like a far. I see what you mean. What you mean by we're looking for a use case here, because I don't necessarily see a use case in which normal people going about their lives using computers for any sort of problems that they have, or even like general developers building applications, have the need to have such an immense computational power that comes from quantum processing. So I don't see it becoming commonplace, but I definitely see a really strong use case for just generally like research problems. I don't know if there's a huge business to be built out of this, but I'm excited for the research implications of this. I think closing the gap between NP complete and NP hard is kind of like a fascinating prospect of quantum computation. And to your point too, James, of cryptographic vulnerabilities from quantum computing, this is also a really big concern that I had. But the more I digged, the more I saw that not only are we kind of like far away from quantum computing becoming a realistic threat to elliptic curvature cryptography, but also even if it ever gets there, you can always make the key size longer, like significantly longer, and just make it a lot harder to break in terms of brute forcing a private key through the existence of a public key. You can always make that public key like 2x, 3x longer. So I think we're kind of safe in the infrastructure, in the mathematical cryptographic infrastructure that is powering blockchains. But that is not to say that I don't think quantum computing is really exciting from the research perspective. And just to close, one of just super last comment. One of my favorite kind of like reference in the quantum computing or quantum computation field is David Deutsch. And I remember when I was reading his book, The Fabric of Reality, in which he talks a lot about like quantum computation. I got really curious about, what does this guy think about crypto? And I went to look some stuff up, some comments I had made in crypto. And I remember seeing a tweet that he made that basically said, somebody asked him about, wouldn't quantum computer break all of crypto? And he basically said, okay, what do I want to trust more, that governments can maintain economic stability, or that somebody's going to be able to have a huge quantum leap and be able to build incredibly powerful quantum computers and widespread proliferation of quantum computers? And it feels like the latter is a little bit more challenging. But sorry, Rich, what were you going to say?
I was just going to say, like, what? So we just got off of the AI computational issue. Like, how come nobody's really talking about?
Yeah.
I mean, could you imagine? You want to talk about scary nuclear power type stuff, Sam? You know, some sort of auto GPT, sort of general artificially intelligent thing that just hoovers up as much data as possible, powered by a quantum computer connected to a nuclear reactor sitting in space, right? Like, you got Skynet right there. But like, Brendan, is that something that people are even talking about? Because the only thing I've ever heard quantum computing, like James and Sam said, like, I've only heard it in the context of two things. One is kind of like this broader sort of cyber defense deterrent, right? So like US government, Chinese government, like really, trying to signal their prowess there, just as like almost like a defense mechanism. And then the other is cryptography, like just breaking encryption and being able to essentially, read all your signal messages or double spend Bitcoin. But like, I don't know if
let me add a third technology to that. So what if there was a AGI model that was being powered by a quantum computer that had a crypto wallet that could pay humans, right, to do what they wanted, right? Like, if you put all these frontier technologies together, that's how you make Skynet. Right?
You know what you get? You get Clippy. You get have you heard of Clippy? Have you ever heard of
Microsoft Clippy?
No, like the AGI idea of Clippy.
No.
It's a mental experiment to illustrate. Yeah, paperclips. It's a mental experiment to illustrate the dangers of AGI. Basically, say you have a model that is super intelligent, and then you give it the goal to maximize the production of paperclips. It starts by buying all the paperclips that it could possibly get its hands on, and then it starts manufacturing those paperclips, and then eventually it keeps like optimizing until it realizes, oh my gosh, actually humans have a lot of the core materials and atoms that I need to actually make paperclips. So it starts just gobbling the entire world just to make paperclips, and the entire universe turns into a paperclip. That's what you get when you connect all those three technologies.
What does
That's
Elon Musk say? He always says the most entertaining outcome is the most likely. Like,
Yeah.
could you imagine?
Yeah,
What
so
happened to all these
Brendan, like,
people?
is that like don't you think that could be the biggest risk? The same way to crypto, that's one of the biggest risks. It could be the biggest risk to OpenAI, right? Like if they spend $10 billion training their models, and then a quantum computer can train that same model for $2, right? They're obviously going to lose. So does anybody talk about the combination of these technologies?
There's like a lot of interesting discussion. I would say they are so disjoint today that we wouldn't train models anywhere nearly in the same methods. And what I'll say by that is not that we can't, it's that the only reason in some ways that OpenAI existed is because the transformer architecture in the GPUs from NVIDIA just at the right time were both like available and someone had the idea. So I think that's going to get cheaper. There's Cerebras, there's tons of companies that are already making this like significantly cheaper. By the time quantum's available, we wouldn't be thinking about the same problem sets to solve for. We would be solving for a brand new set of problems, and that'll look like a different platform. So I'm less worried about quantum in the near term and AI being a real AGI method because we just don't even have an architectural thought of how we would do it. And even if we did,
What do you think are the...
What comes first?
Yeah.
Like, do you think we'll solve AGI first? Do you think we'll solve quantum computing first? Or do you think we'll solve like a global reserve cryptocurrency first? And you can put it in order.
Question.
Like everybody can put this in order. Like and go for it, right? Like, what do you think will happen?
I think we're closer to...
I'll make a quick comment on AGI.
Yeah.
AGI to me is so far off than anyone expects. I think like significantly further off than people think. And the biggest reason I think is we don't have enough sensor data for anything near AI. Like we're already ingesting tons of images, tons of the internet. Like there just doesn't exist enough sensory input for AGI given the current architectures to be realistic. And that could change with the architectural.
You're assuming that AGI needs sensory data. When you mean sensory, you mean like human senses? Is that what you mean by sensory data? Like, or just like weather data, image, olfactory data?
Depends what you mean by
AGI
then. Like that's my response is like, if you want AGI to talk to you, it needs enough sensory data to like do the talking task, which is language and then audio. If you want AGI to run around with us, you need mechanics data. And Boston Dynamics has a lot of interesting work on like how hard that problem is because there just doesn't exist an open format that's been collected over 20 years of the internet that's like you can just scrape and train on. I think like this.
Do you think a text
is like the real one?
Do you think a text interface is enough for AGI? Like if the issue is the interface, I feel like text. I feel like the interface just solves for how do you communicate with it. Doesn't necessarily solve for a model that can reason.
No, I don't think you'll get AGI given the current.
You think both are related? So like the interface and the reasoning are related to each other.
Yeah.
Well, I think there's probably another point that maybe, I don't know, Brendan, if this is kind of what you're thinking, but it's kicking around in my head, which is the definition of AGI is actually a subjective definition. In other words, like it depends on what the viewer, the recipient of the thing is feeling or seeing or thinking. And so there's probably a decent point that if it is just restricted to text, no human would ever interpret that, or humans would have generally a hard time interpreting that as AGI, as opposed to proxies for intelligence. Kind of like when people talk about like sentience, when they're like, I talked to ChatGPT and I said, how does it feel? And it said, great. And so it must be sentient, and it has a soul. And people say like, no, those are kind of proxies for those things, but it's just telling you what you want to hear. It's not really, doesn't really actually feel anything. I mean, who the hell knows if that's true? But like it is kind of interesting. But I wonder if that's kind of the issue, is that it depends on us.
So let's rank it to your definition. Global reserve currency built using cryptography, AGI to your definition, quantum computing. What comes first? I'll go first. I'm very certain that the global reserve currency is going to come first. It's going to be a factor of both, that we already have that technology, and also a factor of how poorly governments are run, right? So that's going to be like a fast one. Then I think it's going to be with just how much money is going to be poured into it. I think we'll get AGI. And then I think the last thing that will break is quantum, because I think the problem with quantum is that because people can't really, the VCs can't really see it and feel it and play with it. You have to be like a really like technical hard tech VC to get excited about it. But AI stuff, all the VCs have already played with it. It's like more familiar. It's like a friend. It's like somebody that, and so you're more willing to put billions to work there than something that, okay, I don't even understand like what the use case is going to be. So I think that's my order. I think it's going to be world currency, then it's going to be AGI, and then it's going to be quantum computing.
I agree with the ranking.
Because the only thing I'll push back on is, didn't OpenAI get funded the exact way you said quantum computers can't be funded? Is dumping $1 billion into something that doesn't have a use case at the start and the onset, and has like no idea of what it's going to do. Like that was their original investment thesis. Was like, put $1 billion into us. We'll give you guys something interesting in like 4 years, 7 years.
But now
maybe
there's not going to be. But now there's not going to be any. Because the use cases we're talking about on quantum, like figuring out the cure to cancer or whatever, right? Like that type of stuff. Like you have to be from a very specific background to appreciate that problem and the solution. But everybody appreciates that they've played with ChatGPT and it's a cool solution, right? So I think that more people are willing to invest in that, at least today. You're right. Maybe 5 years ago, it was in a similar state. But I think today there'll be more money flowing there, and all the attention is going to be there because it's something that is familiar. So,
Brendan, what's your ranking?
Sam agrees with my ranking. What about Brendan?
Quantum, AGI, reserve currency.
No way. You think reserve currency is going to be last?
I think it's the last thing that we have control over. Like I think quantum's going to happen. China and the US are both running at it. One of those two is going to do it. AGI, I think startups, governments, I don't know, someone's going to get to it thereafter. I think reserve currency is the one thing that the current elite will call
it's
it
a coordination problem.
Yeah, like I think that's the one where we actually have some like chokehold on. The other two are just going to happen by like sheer time.
Rich, what do you think?
Interesting.
I mean, the reserve currency thing is got some recency, and it seems like it's a lot easier to pull off because it's just kind of like a mimetic effect, and that just with the internet, I just think that's so easy to disrupt now. So I would say reserve currency. I think quantum computing comes first, and then AGI. Okay. I do think, like, without trying to get over my skis here on what the hell I know what I'm talking about, but like honestly, the quantum computing side thing, like I feel like we just have a better idea of the very finite niche use cases it could be used for, and I think what people are just going to do is just like hyper specialize, hyper focus. The AGI thing is a little bit of like, it's kind of like fusion. I feel like it's going to feel a lot like that, where it's like, well, what does fusion look like? Well, what could it do? And it's like, well, it could power the sun, or it could power your automobile. But we're just going to keep doing this thing at the Princeton Fusion Laboratory, and eventually we'll know it when we see it. So I think that's kind of my order, but I do think the reserve currency is there.
But you know how we will not reach the status of reserve currency with crypto? If we keep having explosions like FTX, which is a great segue into what's probably going to be our last topic, because we've been here probably for 2 hours already, which is the situation of FTX. I don't think we're going to get to talk about the debt ceiling and the banking crisis and all that, but that's probably going to be for our next episode. But Rich, this was your topic.
Yeah.
Talk to us about the FTX bankruptcy procedures and the IRS.
Yeah, I mean, I'm going to keep it really short because I think everyone knows about FTX. I think, for those who don't know, they're a giant crypto exchange. They had a spectacular, we'll call it like rise and then fall, within a matter of weeks, completely unwinding and essentially unraveling like what appeared to be a pretty nefarious scheme of insiders and self-dealing that led to, billions of dollars in losses. And so, like any big company, like Enron, right? These companies go into bankruptcy. And so we've been watching the FTX bankruptcy pretty closely. I mean, I think that there's a couple of things that are really interesting about this that I thought, is worth sharing with listeners. So FTX is actually one of the largest bankruptcies by claimants. So the largest bankruptcy in all of U.S. history usually is referred to as Enron, and it had about 1 million claimants. And FTX is looking at like close to 10 million, which is unheard of. So it's not just the value, but like the number of people who have an issue with this or like need to get paid money is quite high.
Before we go there, do you want to like start by explaining how bankruptcy procedures work? Just like for anyone who may not be familiar, like what's a claimant? How I have money in exchange, it goes bust. What happens to me?
Well, we can keep this conversational, right? I think this is fine. So like when you have a bankruptcy, right, the idea is you file what they call some sort of a chapter 7 or 11 or 13. There's different chapters. In this case, it's a chapter 11. So you're going to try and restructure the company. It triggers what's called an automatic stay. So everything freezes globally. Like no one pays debts, no money leaves the accounts, no one's authorized to do anything. Everyone's supposed to freeze. And this whole process of a bankruptcy is really designed to do a couple things. One is it's designed to kind of like stop payments so that it can right size the ship. In other words, like if this company's viable long term, maybe we just need to restructure its debts based on its revenues, and then maybe forgive some of those debts, or maybe write some of those debts off, or whatever it might be, spin them off, sell them, liquidate some assets to pay them. And then ultimately the goal is like, you patch the ship up and you set it out to sea again, and it becomes the next thing. I mean, this is like you hear about like Radio Shack, like going under like 5 times, right? Like there's a lot of companies that have done this that people have heard about. In this case though, like, having a crypto exchange is very different than running like a retail business that goes under and then, gets new life breathed into it, specifically because, well, one, there's a $14 billion hole, which isn't traditionally an issue that you get with normal bankruptcies. And a lot of that, I think, is the root case of the fraud and the other stuff that was going on. But two, the sheer network effects that a global crypto exchange has in terms of its reach is much greater than I think what, we're traditionally used to seeing in the bankruptcy context. And so if you were somebody who had money on the FTX exchange in any of their products and you were unable to get that money out, essentially you get what we would consider to be like you have a bankruptcy claim against the estate. So you have like a little ticket, it's an IOU that says like, hey, I had $100 here or $100 million. And the bankruptcy court's job is to figure out how do we make those people whole while, not totally, sort of destroying whatever's left of the company. And so a lot of this is just going to be selling these assets. But the thing that was really interesting is, so everyone's getting in line. That's the bankruptcy process. So like Hamiz is an exchange client. I might have sold FTX software, for example. We sit in different positions, right? Like I have a contract, I had a debt. Maybe I secured it with something that FTX owned. Like I would be considered a secured creditor. I'm at the top of the waterfall. I get paid first. Hamiz, who just put like $100 in there and lost his $100. He's an unsecured creditor. He's all the way at the bottom. And below that are the equity holders and the employees who said like, oh, well, I had a retirement package and you were going to pay me $100 million because Sam promised me this is the job of a lifetime. Like that's even lower. Well, somebody who comes in over the top, which is kind of crazy and just did recently, was the IRS. So you have all these people pairing these claims out. The IRS basically said, hi, bankruptcy judge and trustee, this estate, the FTX estate, owes me something in the ballpark of $40 billion in back taxes. And so like that's the big so what today, because if you're the person standing in line, you're basically saying, okay, well, they keep pouring cups of water of assets until that cup above me gets filled. So when the creditors, secured creditors, that cup gets filled, it overflows into the unsecured creditors. And then when that cup gets filled, it overflows. But the IRS just took like basically a giant 20-gallon bucket and put it above everybody. And the question is like, is there ever going to be anything that overflows for the rest of the claimants?
Rich,
but how is that even possible, Rich? Like, how is it possible to have $40 billion of back taxes? Like, there's no way that they could have paid that much to themselves in compensation. So it must be some ridiculous penalties, 5, 6, 700% penalties, or even thousands of percent of penalties. It just doesn't, the math doesn't make any sense.
Well, it can, because there's a couple issues. Like, first off, so even unlawful activity, you have to pay tax on. Like, no joke. So like if I stole all of your money and then, the IRS caught me, they would be like, "Hey, Rich, you never paid income tax on your stolen money." And like, I could be brought into, they could care nothing about the theft. They could just care about mine not paying the taxes on the stolen funds. So that's one part of it, which is arguably, the estate is like all these executives and perhaps the crimes that the corporate entity itself engaged in, which, I don't know what the size of that is. I think everyone's still sizing that up, and we'll find out more in the criminal trials. The second part of it is, if you look at most of the obligations that FTX had, or the assets that it had as an entity, they're mostly related party assets. In other words, FTX doesn't really have a whole lot. Alameda had a lot of it, and Sam and some of the executives who got, all these crazy related party transactions. The IRS might just be looking at like, how many times is Alameda passing money to FTX and FTX passing money to Alameda, and each time that's income. And like, they're not really doing a true up, and who knows how, like, by the way, this is crypto. So if I send 10 Bitcoin to Alameda and it's at $60,000, well, I'm paying tax on that right there and then at $60,000. Never mind that Bitcoin's now only $30,000. So that's why I think you get this. But just to kind of end this, right? The IRS is always going to name a bigger number. They're going to come in with 40 billion. And then what they're going to do is slowly, they'll probably negotiate a settlement that's much less than that. But the idea is they want to stick their flag way far in the other side's territory so that even walking it back halfway, they're getting a $20 billion check.
I have two questions here, Rich. First is, how big is the state estimated to be right now of FTX? Because I know they keep finding money every day that they forgot under the mattress or whatever. How big is the estate right now?
Yeah, so the estate right now, like, again, this is based on some of the more, like, this is the balances at the time of the petition. So the estate had about 14 billion in liabilities. In other words, things they owed people, debts, money they owed customers, etc. In terms of assets, they allegedly also had 14 billion in assets, but 13 billion of it is what we call related party assets or receivables. In other words, it's money they're owed by a related party. Who the related party is it's Alameda. So yeah, FTX technically, if you get rid of that giant chunk of 13 billion, FTX has about $1 billion in stuff that they can liquidate. But even and some change.
Even if you have, okay, let's just say that all of FTX has 14 billion in assets to serve 14 billion in liabilities, which are all the creditors. My question then is, let's just assume that the IRS is going to get half of the check, right? Let's just 20 billion. So two questions here. One is, do you think there's any sort of like second order incentives for the IRS or the government to be pretty much completely extinguishing the entire bankruptcy procedures or any other claimants? Because this pretty much renders if the IRS gets a $20 billion claim, this pretty much renders everybody else who has a claim in FTX, which, as a matter of fact, are very crypto-friendly people, because are people who were either doing business with FTX or were directly users of FTX, renders them pretty much insolvent. Do you think there's any kind of like hidden incentives here by the IRS to like kill or hit everyone else who was involved in that?
I mean, it's bad PR for them, right? Like, so it's the opposite. Like, basically, the IRS coming in and doing this, like, to your point, they're kind of robbing Peter to pay Paul in a sense. In other words, they're taking money from FTX that would have gone to victims of FTX, their schemes, right? And they're saying, actually, we're going to get paid first because this entity owes us taxes. Look, the IRS does this. Like, I worked on the FIFA World Cup bribery schemes for 5 years, and we got judgments against a lot of bad actors for hundreds of millions of dollars. And I will tell you, almost every time we'd be like, wow, we recovered $50 million for our client. And, like that's like victim funds. It's like tax free. It's like, this is what you're going to get paid back for the harm that was caused to you. And then the IRS would like pop up and be like, oh yeah, that guy owes 15 million in back taxes. And they would take a giant chunk out of it. And then you'd say, all right, well, I can't give the Football Association in the Caribbean, who, by the way, whose annual budget was $1 million a year and they can't even afford uniforms. I actually can't pay them out that $1 million anymore in restitution because the IRS basically took a giant chunk out of the fund. So they get,
and it's just a revenue that they're after. Like what the IRS does is for other bankruptcy procedures or other restitution claims. Is it just like, yeah, we just want more revenue?
I mean, they're a tax agency, right? Their whole goal is to collect taxes. It's kind of a double incentive too, right? Which is like, there's always a saying, don't break the law while you're breaking the law. It's very common among legal circles, which is kind of like, it makes you scratch your head. But the point is, if you were a criminal and you were thinking about taking a bunch of money, you're going to get whacked both times, which is not only will you get charged criminally and you'll have to pay penalties and restitution in the Southern District of New York or from, in a federal court, but then additionally, the IRS is also there. And so you get pinched both ways. And ultimately, like the government likes that. It's like almost like getting, two
double
bites
penalty.
of the same apple.
Yeah.
Yeah.
I know there's private markets for some of these claims, right? For people who have claims in FTX, kind of like exchanging for quicker liquidity at a fraction of whatever they have a claim for. How have the claim markets reacted to this news of the IRS? Have the claim value gone to like 0 cents on the dollar?
Yeah, I mean, the question is like, how much is the IRS's number? How much are they going to be able to extract? Will they settle for less? And they probably will. And then what does that look like? So like these claim markets, I mean, as you probably see this because it's very interesting. And like from an investor standpoint, it's an area that a lot of people play. I think like for the short term, like the value of these claims is going to take like a pretty serious hit. I don't think it'll go to zero because there's just so much to happen. Like, I mean, honestly, who knows? Sam could have $2 billion squirreled away in Panama for all we know. In which
that
case,
still wouldn't do anything, right, Rich? Like that's the problem. The number that they've come out with is so large that like if we take all the best case scenario, we say okay, they only settle for 25%, right? Nobody still gets paid, right? And Sam finds it $2 billion. People still don't get paid, right? Like it just. I remember, I don't follow this very closely, but I remember the FTX claims were selling for about 20 to 25 cents.
Mm-hmm.
I would imagine they could really only sell for a cent now, and that'd be somebody taking a real, like, a real bet, like a real bet to see like what happens. But I wouldn't pay anything more than a cent for it, like not even close.
Maybe. I mean, like, there's going to be people who want to play that. Like, I mean, it's rolling the dice, right? It's a lottery ticket. I mean, it's kind of like the Mt. Gox thing, right? It's like all your Bitcoin's gone, guys. And there's only like a fraction of it left. Why would you even bother holding on to this thing? Just sell it. And then Bitcoin goes parabolic and all of a sudden the estate's liquid. It like, not just like you're made whole, like it's liquid. They have too much money. And that's, like crypto's a crazy place. So like, I wouldn't be surprised if a lot of the firms are looking at this, went through Mt. Gox one time, saw that, that economic kind of like force of nature come and realized like, oh, wow, okay, if I just stuck this out, it might have been worth it. And by the way, what's the opportunity cost? If the claims are so cheap, you park a couple $1 million there. I mean, geez, funds make bad bets every day that are millions of dollars. I mean, investing in FTX was a bad bet as we know. So like, why not just double down on the claims and say like, well, I think the crypto ecosystem's here to stay. And if Bitcoin goes 10x, well, that's good. So,
yeah. Okay. Any other remarks here?
There's no way this is true. I'm looking at one of the markets that I kind of watch. It went up.
Is it Xclaim?
The claims?
Yeah. No, it's like claims-market.com.
What is it trading at?
Like 20, bid is 20 cents, ask is 25.
Oh, wow.
How does that happen?
I mean, the other thing is you have to pay, like the markets for bankruptcy claims are not very liquid. And so it's kind of like when you see your favorite, meme coin and it's like, wow, it's like going up like so much. And like the volume's like $10,000 a day. Yeah. It's like one guy decided to buy.
That probably is what it is. Because it must.
Xclaims had it.
What is it trading at?
Yeah. So I'm looking at it now. So Xclaims has it at about 24.5 cents on the dollar.
Come on. There's just no way.
is maybe
Guys, have we just
signaling
found the largest arbitrage in the history of arbitrage?
spreadsheet?
The
You
Big
should, you should
Short,
start.
right? Like, yeah,
You should start a three-letter company to make some trades in this arbitrage opportunity.
yeah. Sell a
Yeah.
bunch of these claims, buy a bunch of them at a cent, and sell them at 25 cents. And
I mean, this is what people, people said, like bankruptcies, like all litigation is kind of like this, right? Like it's a saga. It's like a soap opera. Like when FTX first went under, a business partner of mine and mine and I bought like a bunch of claims. Like people were like, this is dead. There's no money here. Sam took it all. He lit it on fire. And it was like 3 cents on the dollar. Like everyone was just running for the hills. And then, it was like 6 months later, this is crypto. Everyone's like, hey, I think we could turn this into an exchange again. Like we could bring this thing back to, people tweeting about it. And it's like those same people were literally like, there's no such thing as crypto anymore. It's all dead. And then 6 months later, they whiplash.
But actually, like I would say that the technology itself was legitimate. The company itself was legitimate. Like there is no doubt that the company itself was actually a profitable company. Like even to this day, after all the investigation that the new FTX management did, like their claim of $1 billion of revenue, that was real. Their claim of a couple $100 million of profit, that was real too. The reason they failed was not because the exchange itself wasn't a profitable, highly successful business, right? It was a 3-year-old company making $1 billion of revenue. That's a successful business. It was because of these conflicts of interest and this like insider dealing that caused them to fail. Their hedge fund was a terrible hedge fund, but their exchange was a phenomenal company.
Yeah. I mean, it's kind of splitting hairs because you need both to run a successful company. It's kind of like Home Depot was a great place to buy hardware until they pilfered the entire company and stole all the cash. And it's like, if they just hadn't done that, if they just had good management. Yeah. So it's part of running a financial services company is having good management that can suss out the conflicts and things like that. But I mean, I wouldn't be surprised. And you're seeing a couple of people who are in or around FTX, like starting new businesses, right? Where they're like, hey, like this worked at a global scale. So we found product market fit. We know it's there. Now we just need to pick these pieces up and like solve for the don't be a criminal. And maybe we can build another $1 billion exchange.
Yeah.
Yeah, I would agree with that. Okay.
Should we wrap and leave the banking crisis and that ceiling for
that will be the
episode?
First topic next time, I promise.
All right, sounds good.
And we'll all go after you. But thank you everyone for joining. This was a very interesting discussion. We hope it was for you as well. And we will try to do these every 2 weeks. So you'll be seeing a lot more content from us. Please give us your feedback. This is the first one, so we'd love to hear from you to see how we can make this better, what format makes more sense, whether there's certain guests we should have on, but we're excited to get this off the ground. Thanks.